first session of the day.
Thanks, Costa. Okay, so before you get into what sounds like absolutely fascinating, very local context and detail, I'm going to give you a bit of a scene-setting exercise, some of the big picture drivers and things that are particularly informing or driving investment into emissions reduction, which is the organisation that I work with, but sort of a bit more generally into sustainability overall as well. I'm going to start with as I said, being asked to talk about trends and drivers. I'm going to start with emissions first and then move to the markets that sort of are surrounding those to begin with. So what is the Zero Net Emissions Agriculture, CRC? So first up, we're zero net emissions, not net zero emissions, only because, and this is before my time, and it is rather silly story, that when the bid was being put together and names were being thought of and how those names contracted into URLs for websites and that sort of thing, they could not find one that began with net zero that didn't conflict with a New Zealand organisation. So we became zero net instead of net zero. But everyone says net zero, don't worry about it if you do. Everyone knows what you mean. There's our mission statement. So we are driving innovation. Costa's talked about the need for innovation in a low emissions future by advancing practical, scalable solutions for farmers. So we are all about finding the solutions that are profitable, that are implementable, that will help farmers lower emissions on farm. We have a really big partner network. The New South Wales Government is an investor in the CRC, along with every state and territory government in Australia, as well as 11 universities and a whole bunch of supply chain partners. We are the biggest cooperative research centre that has ever been funded by the Australian Government, which I think is an indicator of the size of the issue that we are trying to solve. Between all of those partners, they invested $87 million in cash, which the government matched dollar for dollar. It's a 10-year program and we're 2 years in at the moment. So what is the problem that we're addressing and what are we trying to do? Now, the colours have all gone a bit wonky when I sent the pack down and I got put on the computer here, so apologies for that, but I think it's still mostly all visible. Australian agriculture contributes quite a significant proportion of Australia's greenhouse gas emissions. Somewhere between, in recent years, 12 and nearly 20%. It does vary quite a bit, and that's dependent on environmental conditions, the size of the herd in particular. So if we have a run of drought years and the herd diminishes, emissions go down, herd builds back up, emissions go up, and so on. The thing about our emissions profile, though, as an industry, is it's going to keep going up as a share of the emissions of the economy, and there is really no way around that. Even as we get better and better at reducing emissions, and we will do that, our share in the overall economy is going to go up, and it's going to end up being quite significant, and I'll get to that a bit further on. And that's really because every other sector in the economy has technology solutions to reduce emissions. We have technology solutions, but we are still a biological system, and the biology of our system creates emissions. There is no way around that. It will always do that. We can offset those emissions through soil carbon sequestration, and we can be net zero, but our gross emissions, the emissions that we produce as a sector, is always going to be there. It's a function of the biology of agriculture, compared to other sectors where it's just technology solutions to reduce. So our share will continue to go up. So what's the plan about how we address that and how we get to net zero as a sector and as the overall economy? So the Australian Government does have a plan to get to net zero by 2050, and it has a whole bunch of sectoral plans that go along with that. So there is an agriculture and land sector plan that is part of the overall economy's transition to net zero. Now, unfortunately, the colours have gone a bit funny in this one, so it's a bit hard to see the graph in particular. But what it shows is if you look at the very bottom sort of brown stripy colour, those are the emissions that are being removed from the atmosphere. So that is sequestration through trees, through soil. That is the removal part of the net zero equation. So when you get to the very end of the graph in 2050, you'll see there's an equal amount in that brown bit compared to above the line. So we're still producing emissions, but we're netting that off with what we're removing from the atmosphere. So that is net zero. So we're going to have to do quite a bit more sequestration by 2050 to be able to net off those emissions that remain. The colours above the line are all the various sectors of the economy, the different plans that there are, and agriculture is the first one above brown. And you can see that it actually doesn't reduce that much compared to the other sectors by 2050. The government target is a 28% reduction in emissions in agriculture by 2050. Compared to, say, energy, which reduces almost to zero gross emissions. So it is a challenge. It's a significant challenge. The focus will be on agriculture. Our emissions as a share of the economy by 2050 will be nearly 50%. So that focus is always going to be there. So what does that plan have in there, the Ag and Land Sector Plan? How does that relate to R&D in particular, and innovation and development of innovation? At the moment, as I said, we're about 19, nearly 20% contribution to the economy's emissions. The net emissions, the land sector is a really significant part of the overall economy transition to net zero, and you're going to see a lot of stuff about that over the next couple of days around carbon projects and soil carbon sequestration. It's important to note in this plan as well that there is still a very significant increase in productivity that's forecast as part of the plan. So a 35% increase in ag production by 2050, as well as doing all of this. So what that means is that our efficiency, our ability to produce more with less emissions there's a huge driver around that, huge need to understand how we do that, which is where the R&D comes in. And R&D is going to be absolutely fundamental. We can't do that at the moment with the technologies that we have. We are going to have to keep producing more efficient, more emissions, or lower the emissions intensity of everything that we do in agriculture to be able to meet these targets. There are significant opportunities in the plan to be able to do that, though. Not the least of which, and it was great to have Auntie Di giving the welcome this morning, is learning from Indigenous land management techniques for how we can work more sympathetically with country to reduce emissions as well. Huge opportunities in methane from livestock. I'll get to that in a minute. Just the boring basic stuff around how we account for everything that we do. That's actually really important to know that we are improving, that we're not greenwashing, that we're not double accounting, that we are actually doing what we think we're doing. And then there's massive opportunities for agriculture coming out of the rest of the economy as well, with circular economic solutions and supply chain focus that recycles and brings things back into agriculture. What's our role? So the CRC has a very significant role in it's mentioned quite a lot in that Ag and Land Sector Plan. It's one of the primary investments that the government is making into delivering solutions. One of the main roles that we have is just as a facilitating organisation that pulls lots of different research from different parts of agriculture together. For those of you that are sort of familiar with the ag R&D landscape, you'd know that it's quite siloed. There's lots of commodity-specific R&D. We work across all of agriculture and through different parts of the supply chain as well. Most of our investment is pre-farm gate, but we are very conscious that to get the reward systems working, to get the recognition, we need to be working through the supply chain as well. So as that organisation that basically works across everything, that's the role that we play. Okay, a bit more about the emissions itself and where we're going to be investing. It's mostly methane. It's mostly enteric methane. 77%, nearly 80% in big years, big animal production years comes from enteric methane. Next most significant is nitrous oxide, and then a little bit from carbon dioxide. Because our mission is basically to deliver the most impact that we can for emissions in its totality out of agriculture, we invest where the emissions are, so most of our investment is into solutions for enteric methane, although we do have quite significant investments in nitrous oxide as well. This is our plan on a page for what we're investing in. As I said, it's the biggest CRC that's been funded by the Australian government. Between the cash contributions and the in-kind from all our partners, we have about $300 million over 10 years to invest, which is obviously very significant. But when you look at the scale of the problem and what we're trying to do, we can have 10 times that much and still find very, worthwhile and significant things to invest in. We have 4 fundamental research pillars, which are basically plants, animals, whole farm systems, and then opportunities coming out of the rest of the economy. Our first pillar, plants, is where most of our investment is going. And although I mentioned before, our investment is mostly towards methane, plants have such a huge role in the amount of methane that is produced. There is huge variation in methane efficiency of different plant species when they are digested by animals. And we are learning more and more about that, and from what I can see, there's some really low-hanging fruit there to be captured just by having a much better understanding of pasture systems, of pasture species mixes, of how landscapes are grazed in a way to graze plants in a more methane efficient way. Just breeding plants that have different tannin structures, different lipid structures in them, that have a massive impact. I mean, I'm talking, sort of 20-30% reduction in methane by having those sorts of focus in plant breeding. On the animals themselves, we are not really investing in the development of supplements, mainly because there's just a lot of investment happening there already. There's a lot of venture capital, there's a lot of excitement around things like Asparagopsis and other methane mitigants as supplements. We didn't need to be in that space, so what we're focusing on, and that's globally that I'm talking about, like a lot of venture capital globally going into that area. Where we realised that the gap was for Australia is that almost all of that investment in supplements is specific for very intensive animal production systems. So dairies, feedlots, things where you're seeing animals every day, where it's very easy to give supplements either through water or daily treatments. Doesn't work in Australia, particularly across northern Australia and really extensive systems where you're lucky to see your animals once a year. So we're looking at how you can deliver those sorts of compounds in very long-lasting things like biodegradable boluses that will release some mitigant over many months. So that's where we see the gap we're looking at. Just breeding. Methane efficiency is a heritable trait. And again, there's huge variation in there. Some of the early work we're doing, the early trials that we funded, we are seeing a 20% reduction in the average of the herd for the best performers in methane efficiency. So just understanding that and coming up with breeding values so that when you go and buy a bull or a ram, you're actually buying a low methane bull or a low methane ram. Again, really low-hanging fruit, and what's really good about that sort of investment is, and once you start getting that into the herds across Australia, is that it's a permanent improvement, it's incremental, it keeps building, it is just building that methane efficiency in a permanent way into the herd. The third pillar, how does it all come together and get accounted for, validated, get standards built around it? So there is a big barrier and a blocker commercially to adoption of a lot of these technologies at the moment because it's just very hard to get them recognised in a way that can be validated with integrity and built into reward systems and accounted for. So our role is to, as technologies are developed, to test them, to get all the data, to get efficiency factors and things, get them described in a greenhouse gas accounting standard, built into calculators, so it becomes part of our accounting system as well. And then the final one is that circular economy, other opportunities out of the broader economy that might come into agriculture. What we're really keen on doing in that pillar as well, and really across the whole program, is understanding how things like tree plantings work into productive farming agricultural landscapes. We're not about boundary to boundary tree plantings replacing agriculture. We want productive agricultural landscapes, but how do you build emissions reduction and sequestration into those landscapes in a really productive and profitable way? Underpinned, like all CRCs, by a really significant education and training program. We're going to fund lots of PhDs. We are building an Indigenous academy as well, going to what I was talking about before, recognising that two-way learning in this place is critical. So much of Northern Australia is managed by Indigenous corporations. There's a lot that we can work with those organisations to reduce emissions, but also to learn about landscape management from that millennia of knowledge that's there as well. We're also going to have 25 demonstration farms around the country where we test all these concepts at scale and get all the measurements that we need to validate whether they're actually working or not, and built into standards. They'll be distributed around the country and represent, hopefully, as many agroecological zones as we can. I'm just rushing through this a bit because I want to get to the markets bit and talk more about that. So that's just where our initial sites are, the ones we've got contracted at the moment, spread around the country. Okay, markets. And this is sort of where I'll finish and just sort of talk a bit more. How am I going for time? Yeah, okay. Now, what I want to say first up, so Josh talked about the carbon programs they have here, doing carbon programs, but they're not doing it for the carbon program. If you are making changes because of a market, whether it's insetting, offsetting, I think that's the wrong approach. By far and away, every single bit of evidence that there is around either reducing emissions or building carbon or storing carbon or doing something that is captured within a market, the biggest benefit that you're going to get out of that is the productivity, profitability, resilience, just the general improvement that you're going to get in your farming system than the actual market implication as well. Now, there's been a lot of hype and, a lot of opportunities sold around what the opportunities might be out of a market. If that's the reason that you're doing it, I just don't know that that's the primary focus that you should have. There is so much more that these sorts of changes, these sorts of focus on carbon will deliver to your farming system that is just better for your farming system, full stop, and is going to help you out. So that's the first thing I want to mention. But that doesn't mean that there aren't opportunities, and they absolutely should understand what they are and how you might be able to capture them. When we started the CRC, or when the bid was first thought about, which is nearly 5 years ago now, all of the talk was about ACCU, Australian Carbon Credit Unit markets, and the opportunities that came out of those through offsetting. It's still a really important aspect, and there are, good methodologies there, particularly around tree plantings that can be captured and built into productive farming systems. What has really changed over the last 5 years since we started is the opportunities that are now emerging within supply chains that are broadly called insetting rather than offsetting, where you are being rewarded by, in somehow, and there are many different ways, through the supply chain that you operate in, rather than selling the carbon that you're sequestering, or whatever sustainability initiative that you are performing on farm, to someone else for them to claim that benefit. It's more complex, and there's still a lot of systems that have been worked out around insetting markets to make sure that it is verifiable, that there's not greenwashing going on, that it can actually be accounted for properly. But what we're seeing is that those opportunities are becoming more immediate, more realisable, and in many cases lower risk than some of the offsetting opportunities that are there. What's driving those insetting opportunities is that companies in supply chains, and often really big companies, global companies, big Australian companies, are making commitments to reduce emissions. And they have to deliver on those commitments now, and they're quite often getting to the point where, we've made a science-based target promise to reduce emissions by 50% in our supply chain or something like that, and going, well, how are we going to do that? And they're making the promises before they actually know what the solutions are. And so now there's pressure on them, and quite a lot of pressure from their shareholders, from their stakeholders. Well, you made this promise, you've got to deliver on it, and actually we want you to go beyond that as well. And that actually drove a lot of the investment in our CRC as well. When you see some of the companies that are investing in our CRC, like Coles, for instance, and other retailers and supply chain people, they need those solutions to deliver on their promises, and they know that they have to pay for it in one way or another. Now, I'm not going to say that what that means is that there'll suddenly be premiums on low emissions products and farmers will get the result of that. That's never going to happen. Straight out, that's just never going to happen. What it does mean, though, is that there will be a generally bigger value pool built into supply chains that can demonstrate emissions reduction. Now, whether that comes from more competitive finance, whether that comes from an incentive to participate in a supply chain, whether it's a penalty for not being able to deliver that. And in fact, the incentive is that if you are not low emissions, you're in a lower cost supply chain. There is going to be financial benefit from being in a low emissions supply chain in one way or another. We need to be able to account for that appropriately and make sure that the benefit for that is distributed appropriately, so the people that are actually making the emissions reduction, which is the farmers in most cases, are actually getting the reward. So that's where we're doing a lot of investment as well, in terms of the platforms, the accounting systems that track those emissions through a supply chain, so that where the reward is entering the supply chain, it is being transferred appropriately so that farmers get the reward for making that as well. So I guess what I sort of just wanted to wrap up with that whole markets thing was to say there is a lot happening in this space. There's a lot of evolution going on. We're nowhere near maturity in terms of products that are stable, that have been tested. The ACCU markets are certainly very high integrity. They're probably the highest integrity in the world in terms of the rigour of the methodologies. They are higher risk, some of them, but depending on the methodology, and they are very long-term commitments. Insetting methodologies, on the other hand, and some of the voluntary markets that are emerging can be lower risk, shorter term, but there are questions and a lot of evolution to go there around just the integrity of some of those and how we build robust systems around them so it's not just greenwashing. I think that's it for me. That is one of the projects that we're investing in, very specifically on understanding how that insetting business model can work. It's a specific project working with AACO and beef value chains and Bovair, which is a feed supplement, measuring the emissions reduction that results and then how that's tracked right through the supply chain. And that's it. Thank you.
Put your hands together for Richard. He set us off on that big picture, which you know, is the place to start. But now we've got the opportunity